Okay, good morning everyone. I'm going to get right into it. We're going to do an early morning stock market analysis video. The reason why I'm going this morning is because I'm seeing some really key levels get hit, and I think we have some objective areas to short the market. So full disclosure, I am shorting the market again. I am short the triple Qs. I am short IWM. I've been short IWM for a while, but adding to that position, I am short Tesla. I am short TSM. And looking for a few others, but those are kind of the key ones right now. All right, so, and I'm in full-size positions on those. Okay, here's what I'm looking for on triple Qs. I threw up a Fibonacci retracement, and I don't do these too often, but it is, you can align certain key levels with that. And basically what you do on TradingView is you go in here, you find your Fib tool, and you go from the high of the current move. So this is really where the move started. This most recent correction in the triple Q started right about here. You go from the high to the low, and you really want to get it as close as you can to the absolute low, which is right there. You can see that was the low of my of the move, and then it'll give you retracement levels, and each level can be a critical stopping point of a counter trend rally. And so you'll see here we have this key level of 371.17, and that's a 61.8 fib retracement level, and that's a very common area. That's pretty much either the 50 or the 61 are the most common areas where counter trend rallies will stop at. The 50's right here at 361, so we didn't stop there, but the 61.8 is right there, and you can see as I zoom in today, that's pretty much the high of today. They stopped short right there at that fib retracement level. So that's something to note. We are at a critical area of resistance in the fib, and then if I get rid of that, you'll also see here, there's your 200 SMA right there. So there is the area that I talked about where it made sense, it was objective to short at. I've been talking about this for a couple weeks as we've been rallying as the critical area that I'm looking to re-short or sell the rip. And this is the area that I'm taking the position on. So put my money where my mouth is, and I am shorting the market right here. Now, again, I could be wrong. We will have to watch. The market could continue to rally, and maybe we're off to new highs. But at a minimum, there should at least be a reaction here, okay? Whether that reaction plays out for the next leg down, which is where I think it's going, all right? If I look at triple Qs, I think we've started a bear market and we're rallying, and I believe that we've had a counter trend rally, and we're going to now start the next leg lower down to 298 as our next level of support. That's what I'm expecting, but only time will tell whether I'm right or wrong. Looking at the hourly chart on the triple Qs, you can see this high that they popped it up into is still negative divergence. See here on the RSI, let me zoom in. We're making a lower high than that former high right there. So we need to see this turn down to help confirm, but it is a divergent high as of right now. And then on the PPO, clearly a lot lower. You can see it is a negative divergent high. So we need to see this turn down, but again, we have a divergent high into major resistance on the 200 SMA. We've got that fib level, lots of indicators to help us take this trade to the downside. Okay, flipping over to the small caps here, IWM, you can see they popped it and rallied it right into major resistance. As I zoom out on the daily, this is the big level of resistance right there, 209, where I would expect the rejections to happen. We do have the 200-day moving average overhead, so if they want to, they might want to rally it into that. I could see that being a possibility. But there is that key level of resistance right there, which was your former area of support for over a year. So as you can see, as I zoom in, they popped it, they were trading above it. They kind of entered into that zone, and then it's been selling off so far this morning, holding below that resistance line. So we'll see how the day closes out. Again, a lot's going to determine on the Qs and the tech sector and whether we get a sell-off there. But I am looking at this being the key level of resistance. And again, we hit it, we hit it here, it was rejected, hit it there, hit it here, it was rejected, and we're just right back there. So again, they've been just kind of bouncing between this range, really, if you look at the bigger picture. So this is an objective area to short at, and I'm adding a little bit to my short position right here. Okay, gold. So gold's, gold's kind of range bound basically. It keeps the buyers are clearly stepping in down here. You can see these wick candles. So I'm not, we could still potentially trade down to this 1833 zone of major support. And if we do that, that's a buy zone, but I'm not going to press my luck. I'm still long gold positions and gold mining positions, and I'm looking to add to those positions. So again, nothing's changed technically. I'm looking to buy the dip in gold and gold miners, and I'm looking to sell the rip in tech and just the general stock market, but basically tech is the area I'm focused on, and small caps. And that's what's going on this morning. Silver is kind of interesting though. Silver, this is silver futures SI, and so silver has very similar downtrend line like gold. I have it marked out here. Support, we got also, this is all resistance through here. We finally broke out, nice impulsive breakout, and we've come in now for a back test. Basically today, you can see they opened it right there at the moving average, the 200-day simple moving average, and the buyers have been stepping in. So that's a zone of support. That's a buy area right down there. Anything down in this area is a buy for silver, and I do believe that silver is probably going to continue the next leg higher. Maybe we'll chop around here just for a few days, but I do think we're actually headed off to higher prices. So I wouldn't see us hitting resistance till about 29.32. There's big resistance up there. Let me just extend that out. So up there is 29 area, should be the next level of major resistance. So it's very objective to buy silver down in this area for a trade up to that level of resistance. And here's an example, PAAS silver miner. You can see here that we have this clean uptrend line on this mining stock, and we've got support, and today they gap it down, but the buyers step right in, and so far we've recovered that level of support. So that's very bullish. And given where silver, the metal's at, this makes sense as, an objective area to buy, basically. It's just proving out that this was support, and it's going to continue to hold that trend line. Okay, Tesla. So yesterday I talked about Tesla being at kind of double areas of resistance. On the daily chart, clear resistance right here on this trend line right there. If I roll out, you can see lots of tags of support. I know I got it all circled, and so it kind of makes it look messy. But basically, if I get rid of those, you can see all the tags of support along this trend line. There's another one right there. And then we broke that, and we ran up for a full back test. So zone of resistance on the daily chart right there. Clear objective area to short this thing. And then if I look at the hourly chart, this most recent rally, which I'm viewing as a counter trend rally, started right back here on March 14th, it looks like, and then just nice clean rally, broke trend, drifted sideways, gapped up right into resistance, and basically back tested the hourly trend line as well. So big zone of resistance. I'm looking for this to continue lower in this area, and I am short. Where do we head in the longer term? If this is going to prove to be a nice swing trade, I think the target will be down here, down at 555, right there. Again, I'm viewing this as a bear market rally, so we started the bear market, nice impulsive rally, and then we roll over to make our next impulsive leg lower. All right, so that's how we're going to treat this as of right now until proven wrong. And TSM, this is a semiconductor. I really like this for a short trade as well. So I'm adding to this position and taking a new short. Basically, I took a short on this the other day when we broke back here on the 4th, I believe is where I took it. We traded it down. So again, it broke key support on the daily chart right here at 108. It's about 108.24. Look at all the tags of support there. We finally broke. And so we shorted it right here. We shorted it down. It didn't really get down that far. I covered this short trade when I covered all my short trades back on, basically right before I went on vacation, March 15th. And it rallied right back up into resistance. And you can see we've just been treading, basically holding underneath, consolidating underneath this resistance level. All right, so I am looking for this to reject with the market and sell down. Level of support is right there at about 95.53. It's not that strong a support though. I can easily see us getting down to the 76.56 as a much more solid level of support. So that's what we're looking for. If you look at the hourly chart here, you'll see that these little highs that we've been making right here, high, little high, high today, they're all divergent highs. So you'll see the momentum is dropping off while the stock continues to kind of like pop and make these little tiny highs, just marginal highs, and then fail. All right, so that tells me that each one of these highs into these key resistance levels are objective areas to short, because we're shorting right into major resistance with the negative divergence. So it makes sense to short here. Doesn't mean I'm going to be right, and none of these trades I'm guaranteed to be right, but that's why it's critical to take these at key, kind of these key levels of resistance. So if we're wrong, we can be wrong small, and we can exit our positions with small losses. Okay, and the one thing we need to see to really help confirm some of these short trades is these FANG stocks to start to break down. So Apple, I've got support on Apple about 176. Also, you've got on the hourly chart this uptrend line. If I extend this out, you can see we basically are backtesting again today. So there's a backtest right there. Let me get rid of this little guy. There's a backtest right there, which means that's an objective area too short. We do have negative divergence, so you'll see that this divergence is just continuing. So this is an objective area to short, and Apple should reject here and start to fail. All right, so I'm looking for that, and it's pretty much the same story on the rest of these as well. Microsoft, my trend line here on the hourly chart. This one didn't quite fully backtest. You could maybe extend it out like that. It's not the cleanest trend line, but you got a level there, and then a back test, and then another back test. So maybe that's what it's doing. Facebook, same deal. So all of these have been in an uptrend, but they've all recently broke yesterday, and then they're back testing today. So now I'm looking for these to start to sell down pretty impulsively. Look for that impulsive selling today in tech, and that will give us clues that we just saw the high of this most recent counter trend rally. Okay, guys, if you find value in the content, drop me a thumbs up. Check out my stock market technical analysis course. I put together all these concepts and ideas in a single course. It's about 4 to 5 hours of video trainings broken out into different concepts, and I priced it very affordable at $99. So it's accessible to all, and it should really help you refine your skill set with trading. Okay, and I will catch you guys on the next video. Bye.